All right, everyone. We are going to look at CMCL yet again. I know it is one of my favorite stocks, so I'm going to cover it again on this channel. I just think it's extremely interesting. So we'll do three things. We'll look at the valuation. I usually look at the latest earnings, but in this case, I'll probably just look at it through MSN rather than through the SEC website. And then I'll look at kind of other elements to consider, because I really want to go over the total outstanding shares and then their upcoming Bilboes mine. So, this is a gold miner company in Zimbabwe. They have one operating mine, they have one mine under development, and then they have one mine or one area they're exploring. So they're kind of all three. And I really, really like this stock. So if we go to, kind of just a quick view of like their financials, you can see right here, this is massive revenue growth, largely driven by higher gold prices. And then you can see that their cost of goods sold, has remained more or less flat. It has increased, but not nearly the amount. Like you can see right here, 96 million in 2023, 117 million in 2025, whereas the revenue basically doubled. So revenue is expanding a lot faster than the COGS is. And then we really start seeing big margins as gross profit. You look at this. This went from 2023 to 2025. You can see, 41 million to 137 million. Operating expenses have actually gone down. And then the operating income is, look at this, 10 million to 110 million in 2 years. And operating income, not revenue, and operating income. That's really impressive. So then you can see here, it just keeps getting better. The deeper down you go in the statements, you can see this pre-tax income, 8 million to 106 million. And then you got their taxes, and you got their net profit here at the end. So, really, really impressive. Earnings per share is right here. So this is where this stock's also very interesting. They have a total of 19.5 million outstanding shares. The free float, is like 14 million. And the reason why that's important is because the smaller amount of outstanding shares means two things: greater earnings per share, and also it's easier for the stock to make large moves in either direction. So if you look at, let's look at Kinross Gold, KGC stock. How many outstanding shares? So look at this, 1.2 billion shares outstanding. Now, they also have a much larger market cap. So there's that, but, note that this is a very small amount of outstanding shares. So that's really important. And this gross margin has been improving. You see kind of their operating income. This is just really good, earnings. The valuation, I think I can find it on this page. Where do I find it? Yeah, I think this is what I want. So look at this right here. Their price to earnings is half of what the mining average is. Price to sales is almost a third of what the normal average is. Price to book, much smaller. The PE ratio, look at this, debt to EBITDA is really good. Very good quick ratio. Lots, just really good valuation. What I would say undervalued here. So this company just has a lot of. I just think it's undervalued. And now that we're kind of done with valuation, we'll kind of talk about other things that they have going for them. They have another mine in Zimbabwe, Bilbois. Probably saying that wrong. That once it is done, once they secure funding for it, once they start developing it, and once they have it built, the AISC costs, or the total kind of costs per ounce of gold, are going to go down, are going to be about like 1,200, 1,300 for that mine, which is much better than their current blanket mine that they have operating right now. And then the net present value of that mine is like $1 billion plus. So and once they secure the funding, a percentage of that net present value will be pumped directly into the stock. So and that's a big catalyst when they secure that funding. So there's some really things. The thing to consider with this, is you have to follow the gold macro environment. And if you think that it will stay elevated, or if it will crash, or if it will keep going, or whatever. So I personally think that gold will probably excuse me, probably stay around these levels, maybe get back to 5,000. But as long as it stays around these levels, CMCL, Caledonia Mining, is very profitable. So gold doesn't even need to go up. It just needs to kind of stay around these levels, and they're going to make a lot of money. So I like to use kind of AI for evaluating like what the price could be. So if I were to ask like, assuming that gold stays around 4,800 a ounce, and that the Bilbois mine is fully funded and secured in 2026, what price should CMCL trade? Yep. Okay. Yep. So assuming that it stays here, yep, great. This is saying very bullish. I mean, it's at these prices today. So, fully funded. Yep. So the blanket mine. So I need to update this because the AISC costs for the blanket mine are actually around 22,000. So I'll ask it to update that at the end. And then it's given the margin. Bilbois, it's once it gets going, that's 200k ounces of gold produced. The AISC costs are much lower. It's a ton of reserves, and would have a massive annual cash flow. And so the company right now has a market cap of like 500 million, a little less than 500 million. So even just this mine, in cash flow is 3 or 4 times the entire company. So then they're doing the total production of the gold, mid-tier producer overnight, valuation methods. Right now it's, is doing it by free cash flow. And it's kind of, you could do the valuation method based off earnings per share, rather than free cash flow, but I think free cash flow is probably better for miners. Because the reason why I say that is because a lot of miners have depreciation and capex and that stuff, and so it takes away from the earnings per share, but that's accounting costs. So free cash flow is, I think, the better metric. And then they're saying mid-tier producers often trade at, this per ounce. I need to update this because it's saying the shares outstanding is 13 million, which it kind of is. It's actually 19 million, but the free float is 14 million. So this is kind of what it's saying right here. This is way off. I need to change its assumptions here real quick. Doesn't produce up to 29. Yep. Realistic trading range right here in the near term is more kind of like this. Which, if this is true, this is massive. But I'm gonna. Can you update your calculation to make the blanket mine per ounce, and also assume I'm trying to assume the net present value of the boys mine once funding is secured in 2026 and how that could affect the stock price. Okay. Yep, so we wanted to update that. That's fine. Yep, funded, but not yet producing, which is what we want. Discount it because some investors are scared about it being in Zimbabwe. The shares, it's showing 13 million. I need to maybe update it to that. Cause if I look here, the free float is 14.5 million. The total shares is 19.3 million. So I need to update it to that. Could you hit your calculation to show 14.6 million free float and 19.3 million out. Okay, so this is going to be the final thing. All right. So this is what it's calculating, is that it could trade between 60 and 120 post-funding, construction phase, and then near production. So yep, we had to update the shares and whatnot. So let's even go a little bit further in the negative and be like, assume potential dilution from funding Bill Boys. So this is going to be a negative. So yep. So even, let's just assume heavy dilution, which is not going to happen. I think there might not even be any dilution, but let's just assume under all these scenarios, you're still looking at a multi-bagger. So, yeah, I really like this stock. I think that this is one of the better buys you can make in the market right now. It is dependent upon gold prices staying elevated, which I think they will, but there's CMCL. I know I cover a lot of different stocks. Most of them I don't like or would not buy. But this one, and it seems like almost no one is He hasn't even noticed this stock or pointed it out. But this one's kind of my favorite stock. So there you go. There's CMC.